We follow the trend of the market, and we keep you guys on the right side of the trend. And what you're going to get today is ideas of stocks that are making news and knowing what to do. All right? We're going to start off like we always do on Thursdays, is we're going to start off with looking at what's going on in the market. If you're new to the VectorVest software, this is what the homepage looks like. And from this homepage, you're going to gather a lot of great information on a daily basis to make decisions on the stocks that you own, or helping you make decisions on stocks that you want to either buy or sell given what the market's conditions are. So when we start off looking at our homepage, we have a market timing gauge at the top of the page. It's always on the homepage. This is our daily traffic light into the market because it can change every day. It represents the three colors of a traffic light. Red means stop, yellow means caution or slow down, and green means go. And if you're in New York, you go really, really fast. I'm a New Yorker, so I tend to go really, really fast, even though I'm in North Carolina. We can see that the color guard as of right now, and I am looking at real-time data in the VectorVest software. The color guard right now is neutral, and we give you guidance. VectorVest does not advocate buying any stocks at this time. Why is that? Well, let's take a deeper look at our color guard. The color guard on the homepage tracks three of our market timing indicators. Price, which is the price movement of our VectorVest composite. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track, and currently we track 8,312 stocks. We use that VVC, or VectorVest composite, to time the market. And for those of you who don't believe in timing the market, again, we don't predict which way the market is going to go. We follow the trend of the market and keep you on the right side of the trend. So the price movement of that composite, both on a week-over-week and day-over-day basis. The RT, which is one of our core proprietary indicators. It stands for relative timing, and it looks at the short-term price trend of the market. This indicator will tell me if the market is in an uptrend or not. This indicator is cast on a scale between 0 and 2, where above 1 is favorable. Pretty simple, right? Below 1 is unfavorable. The higher above 1 it is, the faster in an uptrend the market is, and the more below 1 it is, the faster in a downtrend the market is. Currently, the RT, based on that scale of 0 to 2, is below 1, unfavorable, market's in a downtrend, and it's at 0.88 as of right now. The next indicator, the BSR, or buy to sell ratio. As I showed you all of the stocks that we track, every stock in our database of over 8,300 stocks does receive a buy, a sell, or a hold recommendation every single day. When we look at the buy to sell ratio, we're looking at the amount of buys divided by sells. So currently in the database, we have 471 buy recommendations, but 1,995 sell recommendations. That means stocks are falling enough to receive a sell recommendation in the software. If we have more sell recommendations than buys, the market is definitely showing signs of weakness. Now, something very important about this indicator. This is one of two indicators that will let us know when the market has looked or has found a bottom or is looking for a bottom. When the buy to sell ratio gets to a value of 0.20, the market is at a level where it's looking for a bottom. And guess what? With all of the fallation, that's a Glenism, with all of the fallation in the market, we are very close to starting to look for a bottom by way of that buy to sell ratio. Now, we take all three of these indicators, wrap it up into one indicator called the MTI, or market timing indicator. This is also cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. The MTI looks at the underlying trend of the market because it looks at the price, the RT, and the buy to sell ratio in this one indicator. So looking at the color guard, 6-day representation of all three of these indicators, what do we see? More red lights than yellow. How do you get a red light? You get a red light when the indicator has fallen on both the week-over-week and day-over-day basis. We get a yellow light when there's a mixture. Rose on a week-over-week basis, fell on a day-over-day basis, or rose on a day-over-day basis and fell on a week-over-week basis. That's how we get yellow lights. So if we're looking at this like a traffic light, we have more red lights than yellow lights. This is not the time to buy stocks long in the market. What does this mean for the stocks that you currently own? Manage those positions. Allow the stops to manage those positions. And if you get stopped out, right now may not be the right time to be in or replacing those stocks. So from the home page, we get a nice feel of this is not the time to be buying stocks long. And if I own stocks, tighten stops on those stocks. Don't give away all the profit if you've got a gain in them. And if you have some stocks that are losers, don't allow them to be big losers. That is where we get caught up in allowing a stock to get away from us to the downside, all right? Gary says, if price RT and BSR all increase from the previous day, how can the MTI decline? Very good question. Keep in mind that these indicators are looking rising and falling on a day-over-day or week-over-week basis. The MTI looks back in time. It's a 50-day moving average of all three of these indicators, Gary. That is a great question, a question that we get a lot, and that is the explanation. These indicators can rise on a day-over-day, day-over-day, day-over-day basis, but the MTI can fall on a day-over-day basis because it's looking back further in time. Gary, does that make sense? Again, a good question, but that is the answer. This is looking back a little further in time than just day over day as these other indicators are, and it's also looking at all three indicators in one indicator. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.